Ross with Complete Intelligence. Thanks for joining us for another Quick Hit. Today, we are very lucky to have Tracy Schuchart with us again. Tracy is the energy and materials strategist for hedge fund telemetry, and she is a portfolio manager for a family office. So Tracy, thanks very much for joining us. I really appreciate it.
Thank you. Thank you for having me again.
Great. Tracy, I guess part of what I want to talk about today is we're seeing a lot happening in markets on the energy side and in things like industrial metals. We're starting to see some life back in energy, not just food, but even in energy companies who have come a fair bit off of their lows that we saw, say, in Q2 and Q3. Can you help us understand what's happening there? Why are we seeing, if we see people locking down again in the US and locking down in Europe, why are we starting to see life in energy?
Well, I think part of that reason is we are kind of seeing a little bit of that rotation into value from growth, and the energy sector has been really beat up, right? So it's finding a little bit of love just from that kind of rotation. But also, we're seeing these lockdowns and things like that. But what people aren't really realizing is because of all these lockdowns and things of that nature, we're actually seeing demand pick up in other areas where there really was not so much demand before. So everyone's talking about nobody's driving anymore, nobody's flying anymore. When, in fact, everybody's online, e-commerce. We've got cargo ships full in the port of Los Angeles. They're lined up there. So that's shipping fuel. And it's not just in Los Angeles. Asia's seeing the exact same thing, Singapore. So that's a lot of shipping fuel. And then you have, obviously, trucking has become huge. If you look at the truck index, it's basically exploding from 2019, 2018 levels because you have trucks that have to go from the port of LA to, all the way to Atlanta. You have everybody ordering on Amazon. So you have, all sorts of trucking going on. And even down to the little things like, we're actually seeing double propane demand right now. Really because everybody's dining outside and it's getting cold. So demand's showing up in these little places that, that typically didn't have as much demand before. And, I will have to mention that recently, they were talking about the airlines, this holiday season, that actually air travel is picking up. In the United States, domestic travel is almost completely back to normal in Asia and in China particularly. So things aren't as bad as it seems. It's not like there isn't demand elsewhere besides just driving and flying.
Okay. I was just speaking to somebody today who came from an airport, and they said it feels like it's back to more normal. The flights are packed. Granted, there are fewer flights, but the flights that there are pretty busy. So that's good news, I guess. So when we talk about, say, oil and gas companies, we're really starting to see some of those oil and gas companies to come back as well. And spoken, let's say, over the past 6 or 9 months a couple times, and it seemed like there were real issues with those companies, real kind of fundamental operating issues with those companies. Are you seeing those oil and gas companies cycle through their issues? Or are they just kind of waiting, hoping?
I think, a lot of, the Q3 calls that I was on, a lot of these companies are changing kind of their tune a little bit. We've also had a lot of mergers and acquisitions in the space. We've had a lot of bankruptcies in the space. So, that pile has kind of gotten smaller. Only the strong will survive. And not that I don't think that, they're 100% in the clear, but, the bigger names and the bigger companies are finding a little bit of love right now, and especially you see that in refining right now, because heating oil is actually pulling up that whole sector right now, the whole energy sector. So you kind of see refiners were the first ones to really take off because refining margins are getting better as oil prices get higher and things of that nature. So that kind of started leading. And then, of course, there the safe havens like, TDX, XOM, BP, Equinor, when people see oil kind of getting some sort of footing, they're more likely to move into those stocks. As well, they're beaten up, right? If you're looking for value stocks, you want to look for something that's 80% off its highs, right? It's a bargain.
Right. Okay. Okay, that's interesting. So we had also talked about thinking that, say, crude prices would stay depressed for, I don't know, into Q2 or something of next year of 21. Does that seem about right still? Do we still expect things to stay in, say, the low to mid 40s until Q2? Obviously, we'll see bouncing around. I'm not saying it'll never go above that, but do you kind of expect things to stay kind of in that range for the next maybe 2 quarters, or has that moved forward a little bit?
Yeah, I think it's moved forward a little bit. I remember when we spoke last, we were kind of talking to the end of this year, and I kind of, saw kind of the upper 38s. Obviously, that average this quarter so far will be a little bit higher. So I think that, I think that we're still in that range. Like we're not going to see a huge bounce in oil, and it will probably
70s or whatever.
Yeah, you're not yet, but it's coming.
Okay, so let's talk about that. You say it's coming. What brings that about? Is it demand? Is it supply? Is it a massive shortfall? Where's the pressure that would bring about that 70 plus?
I think we're going to have a supply shock, just like we had a demand shock. This time we'll have a supply shock just because of the sheer lack of Capex in the market and the sheer amount of companies that have gone on under. I don't think that you're going to see shale back at 13.5 million barrels per day anytime in the near future ever again. A lot of those wells closed. They're not, they're not going to open them up again. It's just not cost effective. So we lost a lot of producing capacity just because of that. So as we move on and we move forward in time and flights come back and we start having more and more demand, I think we're going to find a shortfall. So I wouldn't be surprised if we see 60, 70 dollars a barrel in 2022.
22. Okay. Yeah, that's fair. That's good. I live in Texas. We like that. So so thanks for that. If you could move that forward a little bit more, we'd be happier here. So okay, so let's move on to materials and metals. We've seen copper have just a stellar few months. Yeah. And given the demand issues that we've seen in the markets, probably a little bit surprising. So can you talk us through some of those dynamics and help us understand how is this here to stay? Are these elevated prices here to stay? Or is this something that, we'll see for a cycle, a relatively quick cycle, then it'll turn back?
Well, I think that, I mean, with copper, we really had, we really had a supply issue, right? Because a lot of the mines were closed during the summer and things like that. China, by that time had already, they were pretty much back up and running and ordering, what they normally order. So that kind of was, that kind of lifted prices off of that like $2 level initially because we had a supply problem. And then I think the expectation is, there's a lot riding on electric vehicles, which require a lot of copper. Manufacturing is, rebounding in a lot of places, maybe not Germany, but, it is rebounding here. It is rebounding in Asia, not just China. It's rebounding in Australia. So, I think that there is that anticipation of demand. We're starting to get supply back online, and yet, prices are still going higher. I don't think we're going to go, straight to $5 by stretch of the imagination, but, that's kind of where copper kind of lost its disconnect with the market, right? When, markets started coming down, copper's still shooting up because it's generally considered a gauge of the health of the global economy. But that kind of correlation went out of whack when we had a whole bunch of supply problems.
Right. And based on copper prices today, I would think everyone was back to work. We're all traveling,
right.
A lot of disposable income. So there is that weird disconnect right now. And I'm not sure that it's necessarily an indicator that a lot of people really point to. So, okay. So we've just had a big change in the U.S. as well with the election and some shifting around. What are you expecting over the next few months? Are you expecting big surprises, big moves, or what are you looking at over the next few months?
I think as far as, everybody pretty much knows Biden, right? Everybody knows his voting record. I look at it, as an energy strategist, obviously I'm looking at his voting record and what his past history, and is it going to, is the new Green Deal going to dictate the markets, or, how is he prone to be? So, he's already got, he's been in office since the 70s. So right. We already know him, right? And and all of his picks so far have been, been in DC forever, right? Whether they've been in the Obama administration, et cetera. So I don't think there's really a whole lot of surprises, which is why I think the market is so calm right now, right? Why? Because the election's basically over. We don't have that anymore. We've got this vaccine, and the people that are going to be taking office in January are people that everybody's familiar with. So I think that's also giving the markets a little bit of complacency at this point.
Right. It does feel a little bit complacent, to be honest. I think you're right. I think you're right. So let's see if there's a surprise over the next few months.
Right? You never know.
Right? So, Tracy, hey, thanks again for your time. It's always great to talk to you. We really appreciate everything you say. I just want to ask everyone watching if you could follow us on YouTube. That would be great. We look forward to seeing you next time.
Great. Thanks.